Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. And the Nifty is hovering around the 23,600 points, give or take a couple of, 10, 20 points here and there. About half an hour back, we were above that level. Now we're just shy of that level. With a gain of close to about 105 points. So we're still consolidating, but there is a positive bias. The mid-cap index in the green, small-cap index in the green. The advanced decline ratio is positive. On the way down, pharma is hurting. The Nifty Pharma index is down over 1%, 1 1/3 lower. The auto index is weak on the back of the 25% imposition of tariffs. So names like Tata Motors have taken a big knock today. On the way up, you've got PSU banks, flying high. The Nifty PSU banking index is up more than 1.5%. Banks itself, on the whole, the big index is up nearly 0.7%. Defense is having a good day. Oil and gas, too, supporting the bulls.
Absolutely right. Good morning, Reema. Not too much to complain about. We would have come from overnight cues that were quite weak, and also imposition of tariffs was something that was seen as a bit of an overhang. But despite that, managing to hold out quite steady. In fact, the mid-cap, small-cap indices both doing quite well, as along with the benchmark indices. Today is an important day. Quite a few events lined up. First on the list, remember, is the NSE rejig. So NSE last month had given a whole raft of changes as far as all of the indices were concerned. We'll focus more on the Nifty. A couple of components coming in to going out a little later on the show. We'll tell you about the impact. And remember, the impact will happen today because the flows will happen today, effective tomorrow. Auto, as well as auto ancillary stocks. You did mention Tata Motors, but quite a few other stocks too, remember, that have exposure to the US market. Names like Bharat Forge, Sona, Comstar, as well as Motherson Sumi. All of these stocks have been very volatile in the session, largely with a negative bias. And one pocket of the market that's doing very well today is actually the PSU banking pack. Citi has a positive 90-day positive catalyst watch on Bank of Baroda. That stock is up over 3.5%. But other names like SBI, Union Bank, these two are supporting. On the back of that, you're actually seeing the PSU banking index outperform quite significantly today.
And if auto is under pressure, you should keep your eye out on the IT companies which provide services to the auto majors, the ER&D companies, right? So, for instance, if Tata Motors gets hit, JLR gets hit worldwide, then even a company like Tata Tech, for whom JLR is or Tata Motors is the anchor client, could get impacted in terms of tech spends, or that's a stock you should watch. KPIT Tech too could be, because it gets 100% of its revenues from the auto OEMs worldwide. If global auto majors come under pressure, you should keep your eye on the auto ER&D company names like a Tata Elxsi, Tata Tech, as well as KPIT Tech. But let's talk about the big loser, and that's Tata Motors. Stock is down close to about 5.5%. Samvardhan Motherson also in focus. Sudarshan joins in with the big story on the tariffs and how it's likely to play out and hurt these companies.
So most of the auto stocks are under pressure, while these stocks have recovered from intraday lows, but still they are down. Like Tata Motors is still down around 5%. Samvardhana Motherson is still down almost 3%. And other stocks like Bharat Forge, Sona BMW, these stocks are under pressure as well. And the reason is US President Donald Trump has announced that he'll impose 25% tariffs on all the cars that are not made in the US and also on the auto parts. And these tariffs will be effective April 2. Now, the first up, why Tata Motors in the focus? JLR has US market. US is one of the important markets for JLR, which forms nearly 1/3 of the total sales. Basically, 1/3 of total sales comes from North America. And also the most important point for JLR is that it does not have any production facility in the US. So all the cars that it sells in the US are imported from other countries like UK, China, and all the other countries. So that's the reason Tata Motors is impacted the most. Second big name is Samvardhana Motherson. Why? Because total US forms nearly 40% of total sales for Samvardhana Motherson, but that's not the important points. Samvardhana Motherson has major auto clients to which Samvardhana Motherson supplies auto parts, and that impact is likely seen in the range of 6 to 7%, and that's one of the reasons that this stock is also under pressure. And apart from this, other stocks are falling as well.
Thank you so much, Sudarshan, for joining in and explaining to us about the impact on Tata Motors, as well as some of the auto ancillary companies that have significant exposure both to the US markets and clients that have exposure to the US markets. Let's now, in fact, also listen in to what exactly President Trump said on auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
In fact, let's also listen in to what Goldman Sachs' Sunil Kaul has to say on reciprocal tariffs and the impact on markets and sectors.
Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. The agri has the largest sort of tariff differential if you do sort of US versus India. I mean, so that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos. I mean, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
Well, moving on, CNBC's Eamon Javers also reports on what he's learned from the White House on the upcoming April tariffs. And an important point there is that non-tariff measures may not be considered.
The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Costello points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week.
That's the big story, and the countdown to April 2nd begins. But get into a break. But before that, it's that time of the year where News 18 Rising Bharat Summit 2025 is here, bringing together the biggest names shaping India's future. So don't miss your chance to be a part of it on April 8th and 9th at the Bharat Mandapam in New Delhi. Scan the code, get your passes now.
Welcome back to Trading Hour. Well, some stocks on the radar, especially stocks from the pharma pack. Remember, There too, there are worries of impending tariffs, and on the back of that, quite a few of the generic names are seeing significant selling pressure. Pharma index near the day's lowest points. Names like Zydus Life, Lupin, Aurobindo, Ajanta Pharma, all of these stocks under pressure. And other stock from the pharma pack, which is also under pressure, but due to different reasons, that is JB Chem and Pharma, a very large block deal there. KKR, has looked to sell almost 10% stake via block deals, and that particular stock, the top laggard as far as the pharma pack is concerned, down over 6%. And one stock from the auto ancillary pack that's seen a very sharp recovery is Bharat Forge. Bharat Forge has seen an intraday recovery of almost 5% and is now trading near the day's highest points and in the green. Bharat Forge is the name that we're talking about. But we'll now shift focus to the commodity space. Manisha Gupta joins in to tell us about copper.
Well, in limelight clearly has been the copper prices trading at all-time highs yet again in COMEX there, where we are holding above $5.22 per pound there. Well, US could impose 25% tariffs on copper imports in weeks rather than months is what really has led to a very bullish sentiment into the markets there. US imports nearly 50% of its requirement and imports nearly 900,000 tons of copper every year. But if you look at the quantum right now, versus an average 70,000 tons of import on a monthly basis, 500,000 tons is what is en route to US, and that has led to a very huge premium in the US markets there, where it is trading at a 19% premium to the front month, and the COMEX is now trading to a premium of 23% in the next 12 months as well. So bullishness continues, though the markets, of course, are putting out a word of caution that we have seen price disparity too huge, and if the 2nd April doesn't bring in reciprocal tariffs as the world is imagining, then you will be looking at some sharp correction coming in for copper prices from here on.
Thank you, Manisha, for that. We will slip into a very short break. We'll come back and discuss market technicals. Apurva Sheth, Head of Research at Samco Securities, will join in with his top trading bets.
important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental org, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me.
Sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Welcome back to Trading Hour. Well, the market continues to see strength and the Nifty once again very close to the 23,600 mark. But today is a very important day given the fact that you will see multiple rejigs, multiple flows that come in from passive index managers. This is on the back of the fact that the NSE indices will see a rejig, and key amongst them will be the fact that there will be 2 new Nifty components that will come in from tomorrow, and there will be 2 exits as well. Along with that, there are a whole raft of changes that the NSE announced. close to a month ago, and all of these will be effective tomorrow. So let's have a look at the Nifty rejig. Remember, 2 stocks come into the Nifty from tomorrow. Zomato as well as Jio Financials will be the entrance. So Zomato is expected to see inflows of close to $421 million. Jio Financial is expected to see inflows of close to $221 million. These flows are estimates as per IIFL Capital. On the other hand, the exclusions, that is BPCL, expected to see outflows of close to $163 million, while Britannia will see outflows of close to $170 million. On the back of that, remember, these stocks will see the flows happen in the session today. The changes will be effective tomorrow. But I'm also watching out for another stock, and that is NBCC. There was a very important and interesting development that the company announced to the exchanges yesterday. So the company yesterday informed the exchanges that they have signed a strategic MOU, or a memorandum of understanding, with Mahatma Phule Renewable Energy and Infrastructure Technology Limited. So what is this particular collaboration or MOU for? This is a collaboration to jointly undertake consultancy, fee-based EPC as well as redevelopment projects. With this, NBCC has now entered the redevelopment project part of Maharashtra. What are the projects that they will be targeting? Number one, cluster development projects, especially in the Thane region, along with the data center, renewable energy initiatives, slum rehabilitation projects in Mumbai metropolitan region, as well as residential projects under the PMAI, or the Pradhan Mantri Awas Yojana. Rima, what is very interesting? The projects, the company says, has a total estimate value of almost 25,000 crore. Remember, NBCC generally will get a PMC fee for these projects, and they also have a partner on board. So it'll be interesting to see what projects come on board and what will be NBCC share. But nevertheless, a positive development, and which is what is rubbing off on the stock today.
Big potential development, for NBCC. Stock is higher by nearly 3%. Apurva Sheth, head of research at Samco Securities, now joins in for a quick technical check on the markets. Apurva, morning. Thank you for joining in. First, what have you made of the markets and the way they've moved over the last 3 trading sessions, largely consolidating? Are you sensing any kind of a breakout, or we'll have to wait for clarity, next week once the tariff situation is clearer? And then if you could give us your stock picks.
Sure. So thanks a lot for inviting me on the show. Now, markets have moved sharply for the last few days. And in the last 2-3 days, the consolidation that we have seen, we believe that this consolidation will continue for a couple of more sessions. So on the Nifty, the range for the markets to look out for would be about 23,400 to 24,000. That is the range that we are looking out for. And once the market is able to, build some base around these levels, we can expect a move in either direction. On the stocks front, Narayan Hrudayalaya is one of the stocks that we would like to recommend. The stop loss would be 1624 and target would be 1760. So the stock has been relatively very strong in the whole downtrend that we have seen since September. So its relative strength is positive. It has seen a good volume based breakout last month, and currently it's forming a flag pattern. So chances of a breakout above 1700 levels are quite high, and if that happens, then we can see the levels of 1760 and even 1800 in the short to medium term. Next stock is Marico. So the stock is forming an inverse head and shoulder pattern, and the stock has a very strong support around 600 levels. So the target for Marico would be 700 and stop loss would be 620.
Thank you so much, Apurva, for joining us and giving us both a sense of market levels as well as your top stock picks. Time now for a short break. We'll get back with Sandeep Kumar Gupta, CMD of Gail, on the other side to discuss various developments regarding the company.
Welcome back. Now, the PNGRB is looking to amend the natural gas pipeline tariff regulations, and they've sought public comments on the changes by April 11th. Sandeep Kumar Gupta, Chairman and MD of GAIL, is now joining in to discuss the amendments, the impact on the company, potential tariff revision, which the company has sought a few months back, and their capacity expansion plans. Thank you very much, sir, for joining in. This is Rima here. So let's first talk about the public consultation document, the PCD, that PNGRB has come up with for changes in the natural gas pipeline regulation. One, if you could just detail, how does this impact a company like GAIL, and how will it increase gas consumption?
Yeah, good morning to all the viewers and thank you for hosting me. I welcome this move by PNGRB, which is a very, very positive move and will ensure the viability of the pipeline operators. Few changes which are proposed in this PCD is that there are certain isolated networks of GAIL India Limited which will get benefited because of these regulations, where the normative capacity today is very high, whereas the actual volumes are very low. And currently, as per the current mechanism, the normative capacity becomes the divisor for tariff fixation. So we will get a great boost because now the actual capacity will be determined and more or less the revised tariffs will allow us zone 1 tariffs. So this is one change. The second change which they are bringing is that if the capacity utilization is greater than the normative capacity, the 50% of the benefit of increased capacity utilization will be allowed to be retained by the pipeline operator, which was hitherto surrendered fully. This is second. And the third is that now they are proposing that there will be only 2 zones as against the current 3 zones, because of which while the pipeline operators per se may not gain, but the consumption will get a boost because of normalization of the zone tariffs. These are very positive changes and will have a great benefit to the pipeline operators and especially GAIL, who is having certain isolated networks also, and higher consumption in certain networks.
Okay, so let's talk about the first and the second impact, where on certain isolated networks you will have this increased revenue boost. So have you been able to put a number to it, what the incremental revenues could come in?
No, I will not put a number because this is only a public consultation document. Let it get finalized. But I believe your audience is very knowledgeable and they will be able to judge that the gains are going to be handsome.
Okay. Also, could you give us a sense of the timeline, post-consultation? When can we expect the changes to come into effect? You're not able to give us a ballpark figure. Also, in terms of what could be the positive impact for GAIL?
I can give you a figure as far as the revision of our integrated tariff is concerned, for which we had filed the revised numbers in last August, that is August 24, and which are in active consideration by the regulator, we believe, where we filed a 35% increase in the tariff, which was fixed at 58 rupees 61 paisa per MMBTU. We have filed a tariff of 78 rupees. But even if we, in that filing, if we ignore the future costs and future capex, still we are very hopeful that as against 58.61, we should get somewhere around 72, which is a very, very handsome increase. And that is a substantial increase where we are estimated to gain about 1,200 crore rupees per annum. And in some corners, there remains to be an apprehension that this delay is happening, which may be costing something to the company. I want to inform you that this does not, while timely revisions are definitely welcome, but any delay in this account is more than compensated because we get the 12% post-tax return for the time delay also.
So what you're saying is that you want 78 MMBTU, but you're hopeful at least from 58.6 we should get to 72.
Rupees 78 per
Rupees
MMBTU.
78, correct.
Yeah, definitely. Definitely.
No, but I think you said 72 rupees is what you're hoping. Did I get the number right?
58.61 is the current tariff. 78 we have filed. Even if the future capex and future costs are ignored, still we are very confident of getting 72 rupees.
Okay, so and if you get at least 72, which is a 22% increase, you will get about 1,200 rupees per annum.
Yes.
Okay, and any indications, sir, of the timeline?
I am extremely hopeful, and maybe the very next meeting of the board, which is a monthly meeting.
Okay, so you're hopeful that in the next monthly meeting there could be some decision that could come about. Well, we'll just move on. We also want to talk to you about the Dahej Uran Dabhol Panvel natural gas pipeline. Now, we understand that the PNGRB has approved capacity augmentation. How does this improve prospects for GAIL and how does it impact gas consumption?
Yeah, in this pipeline, the existing capacity was 19.9 MMS CMD, which will get revised to 22.5, and this will enable evacuation from our Dabhol terminal, where we are planning to ramp up the capacity. The capacity is 5 million, but it is constrained because of breakwater and ambient air heating system. I am glad to inform that breakwater is through, and we have got the clearances also, and this monsoon it will be operating as an all-weather terminal. And with the ambient air heating system, which is slated for commissioning in next June, that is June 26, we will attain a capacity of 6.3 MMTPA of this terminal. So this evacuation from this terminal will get enabled because of the capacity augmentation of this pipeline.
Okay. Sir, what will this do to your guidance? Because you had given a transmission volume guidance of 129 to 130 MMS CMD for this year. And then you said you will add about 10 MMS CMD every incremental year, at least for FY26, FY27. Any changes to your volume guidance?
No, we are very confident that this kind of increase should come, given the good prospects of natural gas consumption in the country. With the increasing maturity of all lately authorized geographical areas of city gas distribution, the consumption in the CGD sector is going to be very robust, and we estimate anywhere between 12 to 15% CAGR going forward. This is one. Second, the peak power demand is estimated to be 270 gigawatt in this year, and perhaps it is increasing year on year. And with no more coal capacity coming, coal-powered capacity coming, we believe there is a good scope for gas-based power also, which will also give a good boost to natural gas consumption. Besides, there are other sectors where refineries are getting connected. They are increasing their volumes. Steel at sector should also start consuming with completion of a certain key pipelines reaching to those areas. So we believe that both in marketing as well as in transmission, we have got good prospects going forward.
So, the other thing we want to understand is, number one, post the reallocation of the APM gas, there was first a sharp reduction and then again a slight increase. Has there been any impact on LPG volumes? Post which, how are you looking to mitigate the impact, if any, that you have felt after the reallocation?
Yeah, definitely there is some impact because of this reallocation, because we were getting a favorably priced gas, which will now get replaced with some other volumes, and we have requested for at least a new well gas allocation to us for LPG production. But we are also exploring the possibility of realizing LPG prices at commercial rates instead of the domestic rate. And we are in discussion with the oil marketing companies also in the wake of this reallocation. So there can be some impact, but we are trying to mitigate that through other measures.
So the next question is, as far as the trading business was concerned for GAIL, Q3, you saw multiple one-offs that came. Now, going forward, are any of those issues recurrent? Will Q4 see a sharp reversal from the kind of impact it took in Q3?
No, period to period, it can differ. Month to month, quarter to quarter, there can be variations. But on a yearly basis, we have been giving guidance of 4,000 to 4,500 crores per annum. And we stick by that commitment for this year as well as going forward.
Yeah, so your guidance was 4,500 crore, right? Are you saying now it could be 4 to 4,500 crore, the marketing guidance?
Yeah, I'm saying it is 4,000 to 4,500 crores on an annual basis is our guidance, which remains there as such for future also, for future years also.
So give us a sense of the gas sourcing strategy of GAIL. We also understand that currently spot prices for petchem is quite high. So what is the kind of strategy you're going through, and how do you expect to mitigate any margin impact?
No, we have the largest portfolio in the country, and we are increasing our portfolio. Recently also 3 deals we did for 2.25 million metric tons, taking our total portfolio to above 16 million metric tons per annum. Some of the volumes will start flowing new contracts. Some of the volumes will start flow from the next year itself. And we will be ramping up these volumes year on year, given our market share in the country also. And we believe that we have a good portfolio, well diversified in terms of pricing also. And we will also be scouting for new volumes at attractive prices. So that should not be a concern. And we are exploring all sorts, all geographies for sourcing new volumes.
So now coming to the LNG part of the business once again, we understand that there was a slight guidance cut when it comes to FY26. Now going forward, what is the outlook as far as that particular business is concerned? And also investors want to know whether there is going to be a stated dividend payout policy in place or buyback in store.
I could not get your first question. What is that? What is the question on LNG?
The LNG guidance, was it trimmed lower? And FY26, what is the outlook?
No, I think our guidance is regarding the trading margins, which includes some secured margin business of domestic gas and also includes certain trading of our LNG. So on a combined basis, including the stable part and the volatile part, I am saying 4,000 to 4,500 crore is the guidance, not only for the current year, but for all future also. Does that make it clear?
Yes, sir. Yes, sir. And a quick update on the dividend payout policy or any impending buybacks?
No, our dividend payout policy is there on our website also, which says that minimum 30% of PAT. But then we are governed by the DIPAM guidelines also, which mandates that 4% of net worth or 30% of PAT, whichever is higher, should be the dividend. And but then we are generating good cash flows and expect to do more payout. 4% of net worth is definitely guaranteed. But in terms of PAT payout, it remains in the range of 40 to 45% every year.
Thank you so much, sir, for joining us, talking to us about important regulations as far as the oil and gas space is concerned, and also giving us an outlook for the upcoming year. Thank you once again, sir. We'll now take a short break. Up next, we'll discuss market fundamentals with Christy Mathai, Fund Manager, Equity at Quantum AMC. Welcome back to Trading Hour. Well, Christy Mathai, Fund Manager, Equity at Quantum AMC, joins us now to discuss market fundamentals as well as the top sectoral picks. First up, Christy, thank you so much for joining us. How worried are you about all of the tariffs that have come about? Which are the sectors that you're most worried about where you could see significant impact?
Right. Thanks, Vivek, for having me. So, to start off with, ever since President Trump came up in, October, November, there have been a lot of, tariff concerns that have plagued the market, and it is possibly one of the reasons, apart from high valuations, which has plagued the Indian markets, if you were to look at it. Now, as we enter into, April 2nd, where possibly a host of items can come into this tariff, tariff regulations, there is also some sort of certainty that we are looking at. It is not as bad as fear. So if you were to look at sectorally, auto with today's what has happened, you see the auto space, getting impacted more so in the auto ancillary space. If you look at most of the large OEMs that we have, they have negligible exports to US, barring maybe few. Auto ancillary, there could be substantial, presence in US, which have to be mitigated some or the other way. Price hikes in the end market looks difficult. More so, putting a manufacturing facility in a quick, period. So there could be some bit of pain there. The other key sector from a market perspective is the pharma sector, if you were to look at it, the whole generic space. So broadly, if you were to think about the generic space, of the total pharma basket in US, generics are close to about 14%, and they do a lot in terms of subsidizing, the cost to the end consumer. And possibly the reciprocal tariff that could come in, it is still under discussion. So the Indian government may also lower some of the, it is still in the negotiation stage. The Indian government may lower some of the taxation in some of the pocket, which is close to about 800 million. Near about. So we do not fear so much more impact on pharma, and and we have seen the pharma not doing so well in the recent past, given these concerns. But because of generic positioning, it would be very difficult to put significant tariff, or even so, if it is there, there could be passing on the cost as opposed to auto and auto ancillary.
Have you done any analysis on the auto ancillary? Because there are so many companies like Sona Comstar, Bharat Ford, Samvardhan, Sansera, Ramkrishna. At Quantum, have you done the analysis? Which company gets impacted how much? And do you own any in your portfolio?
No, again, in terms of exposures, we are mostly into domestic, facing companies. If you want to look at our auto exposure, it's primarily two-wheelers. We have some bit in the CV play as well, but primarily domestic-facing companies. If you want to look at the whole basket of the auto stocks that are present, especially the OEMs, majority are India-focused. Maybe some bit of exports outside, but to US there could be, maybe you can count them on your fingers in terms of company exposure, large company exposure. See, one of the possible impacts back of the envelope is perhaps the margin impact that could come if you were to build in these costs into your estimates, right? So that there could be about 100-150 bips impact that can come in some of these auto anchor players, but it has to be, we have to look at individual names and to figure out where the exposure could be and what is the propensity to mitigate it through a price impact. So that has to be more selective.
Understood that. Christy, the other thing we want to understand is, and something that you briefly alluded to in your first answer, was the impact as far as the pharmaceutical space is concerned, especially generics. Now, within the pharma pack, where do your preferences lie? Is it domestic-facing companies, or export-oriented companies, and will it be, the generic players or the CDMO players?
Right. So we have two names in our portfolio within the pharma bucket, and broadly, if you were to look at the exposure towards US, it could range from 35 to 40-45% near about. So some bit of exposure to the export-facing. But as again said, we are not so concerned because if you were to look at the whole reciprocal taxation and how it behaves, we export close to about 8 to 10 billion, sort of every year, and we import close to about 800 million. And the taxation on the 800 million to about $1 billion is on the higher side, whereas the generic there is virtually no taxation. So it could very well be that the government, still in the negotiation stage, may lower the taxation on that. And if it were not to happen, the other impact is possibly how do they price the product in the end market, especially if you look at the certain shortages, product shortages has happened in the recent past. It is primarily because, either the facilities are getting impacted or, the cost of manufacturing certain products because of the competitiveness is very high. And so people are vacating that space. So if you were to think about, cost increases as a whole, not a lot of players would survive in that sense if you were to just look at the US market. And also, India has this advantage in terms of lower cost of production versus the US. So some of the Indian majors have set up, facilities in US, but those are very less, far and few in between. So our confidence comes mainly from the fact that the generic pricing is already at a low price. There could be a cyclical uptick that we have seen in the recent past. And, if you were to increase that further bit, chances are the companies would want to pass on that cost as opposed to keep it to themselves.
Christy, you all also own Gail in your long-term equity fund. You have about a 2% holding, GSPL. We were just chatting with the management of Gail, and the PNGRB has made some amendments to the tariff regulation. And the company was just telling us, Gail was telling us that it will be a big positive for them. While they've not quantified the revenue impact, and they're also hopeful of that tariff revision coming through. The stock is corrected about 27-28% from its 52-week high. What are your thoughts on Gail? Is it attractive to add at these levels, or just continue to hold on?
Yeah, again, I wouldn't want to get into specific stocks, but broadly, the utility space looks attractive to us. The way we think about it is majority of them, at least what the names that we own, are regulated equity businesses. For the capex that you do, you get your certain sort of return on equity. And while the PNGRB pricing and all is quite volatile and could be all over the place, at least we have seen the last edition, there were a fair bit of surprises that came in. So it's very difficult to call out how, that could evolve. But in that whole matrix of regulated equity returns and the valuation that we pay to some of these stocks, if it fits the bill, we would be adding. And some of the names that we said, more recently we've been adding to some of them, especially in the utility space. given the price correction that you said has happened, they look probably pretty attractive to us at this point.
Thank you so much, Christy, for joining us, giving us your view on what could be likely tariff impacts as well as your sector-specific outlooks are. Well, time now for a short break. We'll get him on the markets on the other side.
Welcome back. The Nifty is at 23,600, give or take a couple of points here and there. It's been a good Thursday morning so far. Earlier today, we had a chat with CLSA's Lawrence Belanco, and he believes the worst is now over for the markets. Listen in.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000. If you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window. We still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Well, that brings us to a close in Trading Hour. Thank you very much for watching. Stay tuned. Halftime Report is up next.